Ladies and gentlemen, K Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down, another 1% down day on the S&P. We saw about a 1% down day yesterday. We saw a gap down today this morning. It was down more. There's a little bit of bounce there earlier today, or pretty much the rest of the day. We saw that first hour pullback, and it's been kind of bouncing up here. So market ended the day about 1% negative on the S&P. NASDAQ is actually almost flat there today. Well, the NASDAQ and the semiconductor were down much heavier yesterday, but it looks like NASDAQ and the semis are holding up better. Semi actually being a little green today. Dow down about 1.5. Small caps down a little bit. Banks got hit heavier, along with the energy sector. They're about 2%, 2.5% down. Transport's down about 1.5%. Transport has been just there has been no consolidation or pullback. If you look at actually transportation average chart on a daily chart, you will see that it's been going up pretty much straight up and hasn't slowed down. Looks like it's down about 1.5% there though. Biotech up a little bit there. Emerging market is down a little bit. Grayscale Bitcoin is down actually positive today, 1.5%. Gold, silver, miners, they're up. Silver's up about 1.2 though. Oil's up about 1%. Dollar's flat. Treasury bond is down a little bit. VIX popped there, 11% positive today. Let's stick with the S&P 65-minute chart. Spider here. So, okay, so some of the things we talked about in the last night's update, because yesterday we talked about this market being in an uptrend still, right? And everything was going to be negated if we do see some kind of a blow-through gap down, right? And we actually saw that blow-through gap down. I wasn't predicting. I say if we see some sort of blow, because we were looking at a lot of different support levels and things like that, prior resistance, prior support, the short term, the Fibonacci. We're looking at all of those levels. And sometimes I talk about this a lot, that sometimes market don't want to deal with it. This particular day, the bears didn't want to deal with none of that support area. So what does it do? It jumped over that fence, gapping it down, which would have been the best case scenario for bears anyways, just because there's so many short-term, micro-term supports in that vicinity. So with that, now market is back down to this low. This is important low, because you can see that how many times we hit this level, gone back up here. Keep in mind though, in the short term of things, I would have to say we're kind of, bearish to neutral. The reason why I don't completely went bearish on the short term is the fact that we haven't cultivated lower low yet, looking at things here, like maybe mid to short term, right? We do have higher highs here, right? We got that higher high cultivation. That's always a good thing. Trend is cultivating those highs. And with today's move, that higher low has been decimated. Now we no longer have a higher lows. We have what I call eco lows here. So this is really important for bears. If you're a bear, you want this market to see much steeper correction. You make sure bulls don't go up here and fill this gap. This is going to be your lifeline. If once this gap gets filled, you're going to lose that edge. So bears want to keep this gap open, and I want to come back down and cultivate lower low here, because of 411 being that important level. But you know what happens in an uptrend, because we're in a midterm, long-term uptrend. There are a lot of head fakes. Sometimes it looks like it's going to break down, gets right back. We see something similar to this here. Looks like it's going to break out to the new all-time highs and run, and you can see it comes right back down. The opposite can be true, where, this thing can potentially come down, traps everybody, gets everybody, stops taking out, gets right back up. So what I want to do is I want to give you some wiggle room, right? Let me see if I can go any further. My midterm moving is still residing at 405. So obviously we're still in an uptrend of midterm. So I'm going to give it some wiggle room here. So I'm going to bring, let's do this about 4, not just right on that wick. Again, market sometimes, because there's some people trying to be cute, put their stop just underneath it. So market likes to take those stops out before. So let's give it some wiggle room here. 411, 409, just because sometimes what the market can do, let's say if we do see a downturn tomorrow, this thing goes down in intraday, and towards the end of the day, we get right back up and we see something like this, and that kind of stuff can happen quite a bit when you're dealing with longer term, mid-term uptrend market. So, but in the short term of things, I'm going to state, bearish to neutral. More bearish because we have that gap still open, hasn't been filled as of today. Things can change tomorrow. As of now, that I can see, this gap still remains open. My short-term moving average, my second short-term moving average, it's all, the price is trading beneath it. So that's where that bearish sentiment comes from. Leaning a little bit neutral though, because we're holding this lows here, right? We haven't really cultivated that lower low for the bears to truly establish a short-term downtrend. So as of today, as of now, things can change tomorrow. I'm going to look at this. I'm going to classify this more of a short-term to slash mid-term, kind of a consolidational phase at this point, kind of trendless, right? Higher highs, but we don't have a higher lows. We got equal lows. So we're kind of trendless, sideways, digestion, congestion, consolidation, resting pattern, pulse, whatever you want to call it. Because, you see, the market did see kind of nice bullish move here. You can see if I kind of zoom out, right? Since you can see that since late March, we had nice bullish rally. So it makes sense to see kind of, looking at things short to midterm here, kind of correcting through time here, right? So I think overall, obviously, we're still in uptrend in midterm and long term, but in the short term, I think there's some trouble, some hecticness, and bulls want to come up here and fill this gap as quickly as possible. The best case scenario for the buyers, you really want to see smooth transition to the upside, because what's going to happen is there's that short-term moving average is here, second short-term moving average is there, there's a gap still open. All this level is going to give them very hecticness. I'm talking for the buyers. So best case scenario is gapping it up. How much gap up does bulls need to able to find that sustainable move tomorrow? It's going to be a 1% gap up. And I don't know if we've seen any kind of 1% gap up, recently. We've been seeing kind of a smaller gap ups and gap downs, right? I don't know if we've seen any type of 1%. I don't know the last time we've seen anything like that. So maybe, but that's what bulls want to see for the most smooth transition back to the cultivating new all-time highs. If not, this entire vicinity is going to provide resistance, and things are going to get hectic here for the buyers. Let's see if we can get any more information, if we can extract any more information on this analysis, checking out that oscillator here before I let you guys go. So the oscillator is not extremely oversold yet. You can see I can go back all the way to early March, and there's few times where it got extreme oversold. But keep in mind, though, there are a few other times where market did find support in this vicinity here. My oscillator reading it about 26. We're just right on it, right? So actually that tells me, right? So we got that early support area right here. That's where we're at, and that's the late support, which is extreme oversold level. We're not extremely oversold, meaning bears actually do have a little bit more energy left if they choose to push a little more tomorrow. But if we do see any kind of first couple hours of bullish run or gap up, you will see this oscillator crossing right back up here, right on this first level of support on this oscillator. And for this to happen, again, buyers gonna need first 2 hours bullish move and hold that bullish move, or a gap up. We start fizzling back down, we start moving sideways or something like that. We're just pausing here. This thing is going to continue to come down and probably going to hit that extreme oversold level. And every single time, I remember we did see a bounce at this level back in March 4th and April 21st, which was right over here. So that if we do hit it right down here tomorrow, you will see oversold bounce at that time. So I'll come back for you. We'll re-examine the situation tomorrow. I'll tweet things out in the morning if I see anything. Enjoy your evening and good luck trading tomorrow.